Today, while this video 123, let us understand funds flow statement. So the today's topics cover funds flow statement, purpose of funds flow statement, sources and uses of funds in a balance sheet, long-term, short-term sources and uses of funds, detecting diversion of short-term sources of funds for long-term uses, a numerical example for preparation of funds flow statement. A fund flow statement is a statement prepared to analyze the reasons for changes in the financial position of a company between two balance sheets. It portrays the inflow and outflow of funds, that is, sources of funds and application of funds for a particular period. Profit and loss account and balance sheet will give 2 years figure, that is current years and previous year, but it will not explain as to why and how the fund movement has happened. Lending banks expect the entire source of funds which come from owners or outsiders in a business are used in fixed assets and current assets of the same business which are productive in nature. It is also expected that only the long-term sources of funds are used for long-term uses of funds. When working capital finance is provided by banks, it is expected that the company uses the working capital finance only for investment in current assets which are part of operating cycle and are convertible into cash within 12 months. Working capital finance is a short-term source of fund and is one of the items of current liability. Investment in current asset should be met by current liabilities and also from the surplus of long-term sources of fund over long-term uses of funds. The extent of company's investment in working capital and the short-term sources of funds available and the shortfall which need to be bridged can be ascertained from funds flow statement. The company had diverted the short-term sources of fund for long-term uses such as investment in capital asset, capital market, group firms, subsidiary companies, etc. can be detected by preparing and analyzing a funds flow statement. Now the balance sheet format, it has got two sizes. One is the liability sources of fund and the assets uses of funds. The liability side consists of shareholders fund, non-current liability and current liability. The asset sides we have non-current assets and current assets. Sources of funds. It talks about the extents of fund available from owners and outsiders. When we say outsiders, current liability plus non-current liability. Application or uses of fund. It talks about how the funds are being utilized. Funds deployed in fixed assets, funds deployed in non-current assets, funds deployed in current assets, funds deployed in intangible assets. Liability sources of funds. Shareholders fund is a long-term sources of fund. Non-current liability, it is also a long-term sources of fund. Current liability, it is a short-term sources of funds. Coming to the asset side, any non-current asset is a long-term uses. Any current asset is a short-term use. Long-term uses should be funded by long-term sources. Short-term uses should be funded by short-term sources plus surplus of long-term source over long-term use. Now look at 2 years figures, year 1 and year 2. The total short-term sources are 35 and 50 respectively, and total long-term sources are 95 and 125. When you come to the asset side, the total short-term users are 60 and 95, and total long-term users is 70, 80. Now, Y1 and Y2, when you take the long-term sources are 70 and 80. Long-term source is 95 and 125. So the surplus of long-term sources over long-term users are respectively 25 and 45. Now coming to short-term users, they are 60 and 95. Short-term source is 35 and 50. Surplus fund is 25 and 45. So short-term users 60 and 95. Now between Y1 and Y2, you may see that there is a decline in current ratio together with a decline in margin for working capital is called diversion of fund. Here in this example, the current ratio declined from 1.71 to 1 in Y1 to Y2 and from 1.9 to 1 in Y2. Margin for working capital have become 0 in Y1 and Y2. This means there is a diversion of short-term sources for long-term users. Long-term use is 95 and 125. Long-term sources are 95 and 125, and the surplus fund is 0. The short-term users are 35 and 50. Short-term sources is 35, 50. So the surplus fund available from the long-term sources and users have become 0, 0. So the short-term users 25 and 5 have been funded by short-term sources. Now look at the position 1. Capital is 200, fixed assets 350, term loan 300, other assets 150. Position number 2, capital remains the same at 200, whereas term loan increased from 300 to 400. Fixed assets remain at 350, 350. Other assets have increased by 150 to 250. So in position number 2, liability increased by 100. That is, increase in liability is a source. Other assets increased by 100, which means increase in assets is a use. Coming to position number 3, capital is 200, 200, term loan 300 to 400, and decrease to 300. Fixed asset 350, 350, it declined to 250. Other assets increased to 150 to 250 and remains 250. So position number 3, liability decreased by 100. Decrease in liability is a use. Fixed assets increased by 100. Decrease in asset is a source. Similarly, any increase in current asset is a use and any increase in current liability is a source. Decrease in current asset is a source and decrease in current liability is a use. Format of a funds flow statement between 2 years Y1 and Y2. First we will find out the long-term sources. Net profit after tax, add depreciation, add increase in capital, add increase in reserves, add increase in term liabilities, add decrease in gross block, add decrease in non-current assets, add decrease in intangible assets. Any increase is a source, any decrease is also a source. So you get total long-term sources of fund. When it comes to long-term uses, instead of net profit, suppose there is a net loss that is to be taken. Then increase in gross block, increase in non-current asset, increase in intangible assets. These are uses. Then decrease in term liabilities, decrease in capital or reserve, they are sources. So we find out the total uses of funds. Having obtained the total sources and total uses, we have to find out whether there was a surplus or deficit. Having done it, we have to find out the increase in working capital gap. Increase in working capital is given by increase in current asset, increase in current liability excluding bank working capital finance. The result will be increase or decrease in working capital gap. Then you deduct the surplus of LTS over LTU. Then we will find out, is there a shortfall in working capital gap? That shortfall in working capital would have been met by increase in bank borrowing for working capital. This is a format to be used for funds flow statement preparation. Now, with an example, let us understand how the funds flow statement is prepared. We have 2 years position Y1 and Y2. Their net profit is 10 minus 5, 5, depreciation 5, then increase in term loan 60 minus 40, 20, increase in reserves 15 minus 10, 5. So increase in long-term sources is 35. Increase in gross block 70 minus 60, 10. Increase in investment 25 minus 25. So increase in LTU is 15. So increase in LTS was 35. Increase in LTU is 15. There is a surplus of 20. Whenever the computation is done, if there is a surplus of LTS over LTU or LTS is greater than LTU, it means margin for working capital is available. Now the second question is, we have to find out whether the margin is sufficient to meet the working capital. Now increase in current asset is 35, increase in OCL, that is other current liabilities excluding working capital finance, is 5. So increase in working capital gap is 35 minus 5, 30. We are deducting the surplus of LTS over LTU because that is a margin. So the shortfall at 10, then increase in working capital finance 34 minus 24 is 10. So in this case, there is availability of margin. Now we will have to find out whether the margin was sufficient. Having taken depreciation as a source in LTS, gross block value should be taken as LTU. In this case, there is adequate surplus of 20. This surplus is one of the sources to fund working capital. The shortfall in working capital is met by the increase in working capital finance. Increase in working capital gap is 30, less surplus of LTS over LTU is 20. Deficit of 10 is to be met from increase in working capital finance. That is 34 minus 24 is equal to 10. Verification of 1, diversion of short-term source for long-term use, verifying availability of margin for working capital, verifying adequacy of minimum margin for working capital, finding out the source for working capital margin. In case the LTS is greater than LTU, it indicates availability of margin for working capital. Verify the percentage of surplus of LTS over LTU as a percentage of the 1, increase in current assets, that is MPBF method 2, or as a percentage of increase in working capital gap, MPBF method 1. If it is 25% or more, availability of minimum margin is ensured. In this case, it works out to 57% and 66%, ensuring availability of adequate margin. Total LTS was 35, out of which 15 was used in LTU and the balance 20 funded the working capital. Thank you all. I shall come out with such small videos on lending topics. Subscribe to my channel NPIS Learning Modules in Lending and click the like button, which enables you to get notifications whenever a video of mine is uploaded. Follow me on Facebook and Instagram.